Welcome to another episode of my Misguided Investment Journey. I'm Dry Jam. What's on today's episode? Well, first of all, we'll be seeing how my portfolio's going, business news throughout the week, and I'll feature why I actually trade US stocks from the perspective of someone from outside of the US. So let's get the ball rolling and see how my stocks are going. After this week's trading, I'm still trading around the $1,000 mark at $1,007.21. I'm a touch above being 3% down overall, and my average allocation hasn't really changed much in the past week and is sitting around $36. And the 6-week positive run has ended, with the US markets taking a deep breath after gaining 10% since the start of June. And with my portfolio, I'm just a little bit down over the week and would be down over 1% if I didn't make any addition. 2 individual stocks, and there's been some minor victories, with National Healthcare Corp being up nearly 3.5%, but I'm actually surprised by the size of the losses, with Zuora yo-yoing again with a 7% swing on the downside, closely followed by KKR, who got a scare as there's talks from the Democrats proposing a private equity reform bill. Zuora and KKR unfortunately both made it into my top 10 biggest weekly losers on record, being 5th and 7th respectively. This week I'm throwing my money at Square. The market's been a bit more bullish towards Square lately, with improved earning forecasts after a flat first quarter. Now, Square isn't a bargain buy at the moment, but I'm not too concerned at the moment, as I'll be holding on to Square for hopefully years to come. But ultimately, we'll see if this decision was prudent when the earnings report comes in at the start of next month. When it's all said and done, I would consider Square to be one of those very few growth stocks that I'll actually hold on to. Next up is the news. Starting off with Microsoft, and they've delivered a strong Q2 earnings report, with the company growing 12% on an annualized basis. Their earnings per share was $1.37, which was way ahead of what was expected, being $1.21 per share. However, Microsoft's largest growth vehicle, Azure, has slowed to 64% growth, but overall, Microsoft still seems to be going from strength to strength. Shares in Netflix fell more than 10% after the company reported that they lost more than 100,000 US subscribers, when in fact they were expecting a gain of 300,000. Their revenue was also a tad short of what was expected. Netflix blamed the shortfall on increased prices in some regions and seasonal issues as people start to get out of the house when the weather gets warmer. And finally, Boeing was up on Friday after plans that the aircraft manufacturer would take a $4.9 billion charge to compensate their customers affected by the 737 MAX production delays. This is seen as a containment measure to limit future damages to the company. Now let's go ahead and see what's happening in the world markets. And there wasn't any major swings in the indices this week, as the US market sees the largest loss of the bunch, as there's a bit of uncertainty of how aggressive the Fed will be at the end of this month. Hong Kong yet again creates its own path with 1% on the upside, and the remainder of the markets are in a bit of a holding pattern. So no major fireworks this week. Now this leads me to why I actually trade US stocks. I trade US stocks, well, because there's the obvious diversification argument, but I could get that in an S&P tracking ETF. Nah, there's a bit more to it. The US market is the most stable growth market in the world, with an unparalleled amount of opportunity. And where I'm from, Australia would be lucky to represent 1% of the world's total market, so why would I want to limit myself to just that one market? Another reason is over here we're quite familiar with US based products, so it's not a real stretch to properly analyze a US based company. Now, entering the market comes at a price, and that's the dreaded 15% tax that all traders outside of the US have to pay with all capital gains such as dividends and the selling of a position if there's a gain. Is the 15% tax worth it? When buying individual companies with increased upside potential, yeah, I'm willing to pay the premium, but not too much more. I guess in conclusion, time will tell if this journey will be fraught with danger or one step closer to financial independence, but the only way to find out is to try. And that will be about it for today's episode. Once again, if you could like the video and subscribe to the channel, it would be much appreciated. Bye for now.